Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Good morning, welcome to the Forex Daily Video Research to the December 13th, and we will talk about the euro currency. Well, in general, on the weekly time frame, on the monthly time frame, euro hasn't shown during the previous week nothing really interesting. Market stays in the tight range. So as on the monthly chart, on the weekly chart, the situation is almost the same. But on the daily time frame and the lower time frames, we can see some details about this standing in the range, and that will help us to create the trading plan for the beginning of the next week. So let's start from the daily time frame. A lot of stuff on it, so let's move step by step. First of all, the red line on the chart is the JOD MACD predictor indicator that shows us the trend. We can see that trend turns to the bullish, but price action now doesn't confirm that. So in general, this is not a very bullish sign for the price behavior. But usually when this trend shifting doesn't confirm, market usually shows steeper move with the creeping with this line. So in this case, we can say that possibly with these lows will be taken out. But currently, this is not so steep. It's a bit flatter, like the sideways consolidation, but not this fact is very interesting right now. Look at the day trading ranges during the previous week. You can see trading range on Monday, the Tuesday trading range inside day for the Monday, so it was inside the previous trading range. You can see this dojis on the recent 3 days price action. Thursday also includes the Friday's trading range, so the Friday was inside day of the Thursdays. What does it mean for us? We can say that market currently is calling, so it just stands in that range. This market has no direction and makes a decision. It usually leads to some explode in one or other direction. Market stays in some tight range and then explode. What direction will be, who knows? It could be the upper thrust to the upside or down thrust. So just be ready for the possible exploding on the market in the coming week. Also, by the way, you know that on 14th of December the FOMC meeting will start, so possibly this will trigger the moves on the market. But just be prepared for the some move, strong thrust bars, thrust trading bar in the coming week. Now, the blue line is the weekly pivot point that for the coming week is 132.71 right here. Red line is the weekly pivot resistance one, 133.80. This dash line 134.18 monthly pivot point. This is the daily confidence resistance 134.56, 134.61. So this is strong area of resistance and agreement. By the way, look at this A, B, C bottom pattern. If C point will stay here, will stay in place, then the nearest daily target is 134.43 right here. Also take note that this target is just above the previous highs, so the people who place stops just above these highs had placed it in the most unwelcome place, most unwelcome region, because logical profit objective is just above the previous highs. It means that this high will not hold if market will intend to move high, and these stops will be triggered at the fuel to this move to the upside, and we can see on the breakout of this area, but it's a bit early to talk about this. Well, in generally speaking, what we can see on the previous week also, market hit monthly pivot point. This was also the weekly pivot point that I do not have currently on this chart, and moves to the downside. This is also the bearish sign. Okay, now let's shift to the most interesting part of the research. It is intraday chart. The daily support also 131.41, just below the market from this low to this high, 618 support, and green line weekly pivot support 133.22. Now to the intraday charts. Here is the 4-hour chart of euro currency. What do we have here? We can see the obvious triangle pattern that's forming currently on the 4-hour chart. Usually the triangles is the continuation patterns, but when the market shows real strange, the breakout of the triangle happens on the fifth move inside the triangle. What does it mean? 1, 2, 3, 4, and we should see on the 5 move the 5-way breakout of the triangle. When market is just turning and calling inside the triangle, and the 5th way now stays inside of the triangle, we can expect the softer move to the sideways consolidation out of triangle. So it will be just small tight range, market just step out of the triangle and then continue some price action. Well, speaking about the triangle, we can create our possible trading plan for the Monday, or maybe Monday or Tuesday. And I have to say a couple of words about the market mechanics. So everybody see this triangle. It's absolutely obvious. Everybody see this low bottom of this triangle. This is also 50% retracement by the way, from this low to this high. Those people who intends to enter on the upper breakout, so already has placed their stops just below this lows, below this C point, somewhere around this area. But now what we can see here, we can see FIB support 131.36 just below these lows, and weekly pivot support 1 also just below these lows. If market will show in the beginning of the week the downside breakout of this triangle, be aware of the possible wash and rinse. When market hit this area of support, shows some lower breakout, clear out the stops just below this area and returns back. Personally, I prefer to see this scenario before continuation will move to the upside. Why? Here's why. Because this breakout, first of all, will clear out the stops orders that place just below these lows, and will involve the public breakout traders to trade on the short side of the market and to open short positions. And this in turn will allow the larger traders, larger participants on the market, to create their own positions on the long side of the market. They just buy out all the stops below this area and all the short positions of the public in this area, and then return back and continue move to the upside. This is the nature of the wash and rinse. Wash and rinse and is the pattern that shows that larger participants creates on their inventories, long inventories in our case, for the possible move to the upside. This is how wash and rinse works. And before the breakout to the upside, I prefer to see this scenario. This will give me the confidence that market is ready to move higher. The nearest target of this possible move is the ABC pattern, but the C point will be a bit later if we will see the breakout. Okay, so currently it's around 134.43. This is the first scenario. The second possible scenario is when the market will touch the weekly pivot point in the beginning of the week. If it will fail there, be prepared to the move to the downside. And in this case, will it be wash and rinse or will it not? I do not know. But do not be long if market will fail around the weekly pivot point and move lower. Don't be long and don't open the long bullish positions in this case. From the other view, if market intends to move higher, we should see that market break above the weekly pivot point and hold there. If this will happen, you can enter on some shallow retracement on lower time frame, so it could be the 30-minute chart, 15-minute chart, where the thrust impulse move to the upside, wait for some ABC retracement to the downside, and you can enter on the long side with these possible targets. If you're an intraday trader, so you can use this pattern for the possible trading. This is this hourly chart of euro currency, so this is a possibility for the butterfly sale pattern. If markets will move higher and hold above this weekly pivot point, so use some retracement to the downside, enter on the long side, well, the nearest target of the butterfly 127 expansion from this high to this low. Okay, 133.61. The 1618 expansion rather is around 134.17. So it's right here. It's some bug with the software. You don't see the line, but it's right here. Between these areas is weekly pivot resistance 133.80. So possibly when the market will move to the upside, you enter on the long side. Just when it reach some area, you can move your stops to break even and just watch the movie, how market will respond to this target, weekly pivot resistance 1 and the 1618 expansion target from the butterfly. So that's been said, couple of scenarios for the coming week. The calling of the market on the daily time frame makes me think that it should choose the direction in one or another side and explode in the nearest day. Possibly a FOMC meeting will lead to this action. On the lower time frame, on the 4-hour chart, hourly chart, a couple of scenarios. So if you will see the wash and rinse of the lower border of the triangle, and market will reach the weekly pivot support one and fast returns back. So this will give us the confidence that market is ready to move higher. And one of the target is the daily 618 expansion target, daily Fibonacci conference support around 133.40 area. If market will touch the weekly pivot point first and fails there, don't open long positions. Wait for the further price action development. If it will move higher, the weekly pivot point, and will hold there, so you can possibly use this butterfly pattern to open the positions on the long side, to play on the long side. Just keep your risk reasonable and wait for the definite signals, definite scenarios on the market.